Hello and good evening and welcome to Trading Tuesday on March the 8th and a look ahead at what trading opportunities might present themselves this week. We've got an interesting week about to kick off. Some major news announcements over the next couple of days. So what we have ahead and trading opportunities in the FX market that presents themselves according to the Phoenix Blue trading methods will be Aussie USD, New Zealand USD, dollar CAD potentially. We've got opportunities in dollar yen also, and we've also got trades live in GBP USD and an opportunity to add in further on cocoa. So let's start with the markets right now. So first chart we're looking at is Aussie USD. Now we've had a bullish move in the Aussie dollar. This is probably on the back of negative interest rates and people switching to the safe haven of gold, which is having a bit of a knock-on effect, let's say, on gold, which is causing a bit of a push up in Aussie dollar. We do have a lovely level in and around the 75 number, the even handle. However, as the RBA state, they're looking to potentially bring the Aussie dollar further down. Now, what we do have around 75 is we've got a lovely fib level and we've got a supply zone. So we've got a resting order sitting in at 75. We're looking to run this down. First targets in around the 73.40 areas and then potentially running it down to somewhere around the year lows. So that's Aussie dollar. Alternatively, another reason why we are also looking at trading Aussie dollar is the commitment of traders. Now this is something we specialize in at Phoenix Blue. We've got the commercials at a 6-month extreme to the short side. That means they are selling this market aggressively. So tying that in quite nicely with our technicals on Aussie dollar adds more weight. There is also a 6-month extreme on gold to the short side. However, there's no technical reasons for us to add into this market. Take a short trade on gold. So therefore, we're looking at the Aussie dollar as an alternative market. Then we've got Kiwi USD. Okay, so this is a market we did have orders sitting at 68.68 to go short. The market didn't quite actually get up there. It was somewhere in that region. It turned roughly around 68.40s. We could have done with it moving just that little bit higher, as indicated by the arrows. So next potential play, we've got rate decision coming in tomorrow. So will we get a spike from it in the anticipation of no rate hike or no rate reduction, I should say? Are they going to keep the rates the same? Who knows? But let's play with technicals. What we do know is that RBNZ are saying that they would like the Kiwi dollar to be a little lower. So on the flip side, there's alternative or multiple ways we can look at trading this market. Initially, we'll be looking at shorts at 68.68 or in and around that area, and trading it back down towards 67.60, the zone highlighted in and around here. The next way we could look at trading this market is if we do get a clear break and close below that zone, we could look at a retest of 67.50 for short entries, running it down into and around the 64 as a longer term target. Now GBP USD, on the left hand side over here, what you see is a daily chart, and over here is what you see is a 4-hourly chart. Primarily all our trades and our direction is taken from weekly and daily levels. We'll enter aggressively with confluence through horizontals, fibs, trend lines, etc. And then we'll look to add into a move once we get the direction right. So we're currently short GBP USD from 142.50. Mark Carney this morning didn't really give us the legs that we were anticipating. He normally does have a negative impact on the GBP USD, or should say sterling. So we got in short at 142.50 yesterday, nearly got stopped out on the rally up. We held in, we took first profits at 142 today, banking 50 points for the 40-point stop. So next position is at break even. Now moving on from that, what we do have is we're looking for a new lower low on the 4-hour chart, and we'll look for this market to come back up and retest the 142 even handle, and we'll short this back down to 139s as an end target, taking profit off along the way and also reducing risk. Next chart we're going to look at is dollar yen. Reason for this particular market is we can see long-term trend line, we can see fib level highlighted here in this red box. Now we did go long at 111.15 a couple of weeks ago. We'll be looking to go long at a similar level in this demand zone, not only because technically it's sound, but also when we look at the commitment of traders report, we've got an extreme positioning from the commercials, so we're looking to sell yen. On the flip side, our commodity market that we're looking to trade currently will be for an add-in position. For those that have been following us will know that we do trade commodities, and we do trade them pending commitment of traders signals and technicals all lining up. So today we've actually banked half profits on cocoa, and we've moved our stops to break even. What we are now waiting for is a clear close above, as highlighted by this grey line here, close above our supply zone. We're looking for a close above. Once we get a close above, we're going to look to add in and around the big number, the 3,000 level, and we'll look to run this up to around 3,350, where we've got our second targets from our initial position that was traded from this demand zone down here. So there are trades, that's what we're looking at, and that's what we're looking to take advantage of so far this week. We've had a great start. We've hit T1 today on cable. We've got our stops at break even. Cocoa's running nice. We've taken half profits on that, so we can't really ask for a great deal more. It's been a very, very profitable year so far, and long may it continue. So the news we have so far this week, we've got the Bank of Canada rate statement tomorrow, we've got the RBNZ rate statement tomorrow, and then we've got ECB rate statement on Thursday, where we envisage that Mario's going to hit the market with his bazooka that they keep talking about, maybe further lowering interest rates and adding further easing. So we'll be looking to add in potentially, let's say on the euro or any euro pairs to get short. Think about what you are trading. Don't trade weak currency against a weak currency. Look to trade weak against strong preferably, or weak against neutral. So be very selective in the markets that you're trading. Follow us on YouTube. Follow us on Instagram at Phoenix Blue Trading. Follow us on Facebook, Phoenix Blue Trading again. This Trading Tuesday, sorry for it being short and sweet, has been presented by Mark Owen, and I'm sorry that it's come out a little bit later than normal. Look forward to seeing you bright and early in the morning for our morning update that's going to be presented by Tom Colley, and please keep following each day. If you do have any traders out there that are suffering and not making the most out of the markets, get them to start watching our videos. Get them to get in contact with us. Any questions about our material presented, or if you do want to get involved and maybe become one of the Phoenix Blue team and get our watch lists, etc., drop us an email. And that's at info@phoenixblue.co.uk. Okay, good evening and good night from London.